Hello everyone, this is the Main Street Investor back for another stock review. Today we are looking at SoFi Technologies, which is a consumer financial company worth about $7.17 billion today on the open market. Really quickly, before I move on, I want to say thank you so much for taking your time to view this video. If you could, please like the video and subscribe to my channel. It means a ton to me. It'll help me grow and help reach a wider audience so we can continue to educate people on the stocks and the stock market. Thank you so much. And with that, let's hop over to the company's website. So at SoFi's main page, we can see that their mission is to help people reach financial independence and realize their ambitions. SoFi does this a number of different ways. They're first and foremost a lending company. They allow consumers to refinance their loans, but they have since moved into a bunch of other different financial niches, and they have tons of different products that you can use to improve your financial independence, as they say, make your loan repayments potentially lower, as well as, branch into many other different financial products. Moving on over to the company's recent Q3 2023 report that they released just a few days ago, we can see that their members are continuing to grow at an incredibly rapid pace. Currently, 47% year-over-year growth, and 717,000 members have been added in the recent quarter alone. This is incredible growth for this company, and it appears that this growth is going to continue into the future. So all in all, I would say SoFi is building an excellent base for continued operations. Its new product additions have also been rocketing up, and it's up 45% year over year, and they've added 1.05 million new product additions in the recent quarter. Again, there's not much more to say than just excellent growth. Excellent growth. And here we can see on the left, their lending products are up 24% year over year, and their financial service products are up 50% year over year. And what I think is super telling and very interesting is this center part of the graph showing the total financial service products in light blue compared to their lending products in that darker blue-black, and the ratio of those numbers. As we can see, they're moving further and further away from being just a lending company and focusing more on being a total financial service package for a consumer. This should make SoFi's revenues much more stable in the future and much less reliant on consumer credit quality. So overall, I am really pleased to see this continued evolution of the company. So that was a brief overview of SoFi. Let's move into their financial numbers and find out if this is a good investment today. Revenues are up huge over the last 5 years, up 63% per year. I mean, that's just insane growth, and it looks like even if that growth is to be cut in half, it's still just excellent growth. SoFi's net interest income is also expanding really nicely, meaning they're making more money on the loans that they make. That's always great to see for a financial company. The company does not earn positive earnings on a GAAP basis, but they are very close to that number, and it is expected that in 2024, they'll have their first GAAP earnings positive year. And due to negative earnings, we can see that their margins are also going to be negative, but the improvement is still showing, and it's good to see. And hopefully we can see those margins continue to improve, go positive, and then expand. Return on assets is a similar story, but not as large of an improvement, but this is partially due to the fact that SoFi is a lender. They do have certain lending standards that they need to hold themselves to be legally in compliance. And so I'm not as worried about the return on assets not having as large of a jump as their operating margins. But with that said, we are still going to watch for this to go positive in the coming quarters and years. SoFi did enter the markets through an initial public offering in 2021, so that's why we see this huge jump in shares outstanding between 2020 and 2021. And since then, the company has continued to offer more shares, so that's not a great thing to see, but the amount of shares they've been offering have been slowly getting less and less. And hopefully now, with the stock much closer to a fair value versus where it was in 2021 and 2022, we see the company maybe potentially start buying back shares in the next year or 2 or 3. I would not expect them to start purchasing too many shares though, because the company is still focused on growing, not necessarily on returning money to shareholders. SoFi's cash on hand has jumped dramatically in the trailing 12 months, which is really good to see in my opinion, because I think the company should keep more cash on hand given the economic uncertainty and the fact that they are very reliant on consumers who tends to pull back quite a bit if there's any sort of recessionary pressure. So keeping this extra money on hand is great, and I hope that they are able to hold on to it and at least utilize it in a way that helps the company continue to grow, one, and two, maintain a pretty solid credit quality. Since going public, we've seen that SoFi has to report its provisions for loan losses, and that has jumped quite a bit between 2021 and the trailing 12 months. But that's more a result of the fact that SoFi's business has grown so much. I'm not particularly worried about this massive jump because they have still only set approximately $58 million aside for loan losses, which is incredibly small compared to their revenues and their earning potential. The company's book value per share did go positive in 2021, and it's hovered around $5.30 up to $5.60. It hasn't really gone anywhere since the IPO, so that's a little bit worrisome. But in general, I'm still pretty happy to see that this is a positive number and that they are maintaining that book value through time. Tangible book value looks much the same. It's hovering at around $3.25 up to $3.80. And for me, given the stage of SoFi as a company, it's just important to see this number stay positive. Free cash flow per share doesn't necessarily look great, but that 2018 number is probably highly skewed by investments made in SoFi when it was a private company. So I would just ignore that. The company is getting more and more free cash flow negative, which can be very, very worrisome, especially since the free cash flow per share is negative $9 while the company is trading at less than that price on the open market. But this is a growth company. They are in their growth phases. It is typical for free cash to be negative at this time. And as we did see, they do have a fairly large cash balance on their books in order to make up for this gap in free cash flow. And SoFi does not pay a dividend. They probably will not for a very long period of time. So we're just going to move on. And so with our earnings graph, what we can see is that there is no fair value line, and that is because earnings are still negative. So technically the fair value would calculate as being negative. What is very interesting to see, though, is that in 2021, SoFi did have this massive run up to about $25 per share and has since crashed to trading at about $7 per share today. Even at $7 per share, this company is trading at a pretty hefty premium. This is at multiples that are probably, 30, 40, 50 times their future 2024 and 2025 earnings. So $7 is by no means cheap for this company. But what I do want to point out is that its projected CAGR over the next 5 years, according to Yahoo Finance, is 178% per year. Now, to me, that sounds a bit optimistic, but there are plenty of analysts that Yahoo looks at in order to come up with this number. So clearly, there is some major growth opportunities for SoFi. We did see that they're growing at 40, 50% year over year, depending on their categories and segment. So I wouldn't necessarily say it's impossible for their earnings to grow at 178% per year, given the fact that their current client base is growing at 40 and 50% per year. Please do just keep in mind, though, that this company's stock price is heavily reliant on this future growth. And if that growth trajectory is to change, become, much less positive or even flat or negative, then SoFi stock will take a huge punishing fall. And checking out SoFi on a book value basis, I'm only going to include from 2021 when they were book value positive. But with this, we can see that the company is traded at an average price to book value of about 2. Now, this does include 2021 when the company's stock was vastly overvalued, in my opinion. And so the average price to book value is probably not what you want to look at as an indicator of relative valuation and undervaluation or overvaluation. The company's current price to book value, though, is 1.3, and that is much closer to what we would consider a decent or at least understandable price for a financial company. So I'm not too worried about today's valuation, at least on a book value basis. If I set SoFi's price to book value fair price at 1, which would be the baseline that we consider when we look at any financial company, like specifically a bank, we can see that SoFi's fair value is about $5.28 per share versus its current share price of $6.87. If we apply a premium to that book value, let's say of 1.5, which would imply that SoFi will be able to grow quite a bit in the future or will be able to make an excessive return that other companies like banks cannot on that book, then we see a fair value closer to $7.92. So depending on how we want to price SoFi today, if we look on a book value basis, we can see that it's probably pretty close to a fair value, maybe slightly overvalued, maybe slightly undervalued, but definitely its earnings per share valuation, it's much more predicated on future growth. Whereas at least when we compare it to its book value, it does have some semblance of a fair value that we can find. So what are my final thoughts on this company? First off, I love the growth. I cannot stress enough that the growth that SoFi is currently experiencing is incredibly impressive. And if it's able to replicate that for several more years, this company will be a 10 bagger easily. It'll make 10 times what the current price is in no time. Secondly, I really like that its profitability is on the horizon. Like I said, 2024 is expected to be the first year where the company is profitable on a GAAP earnings basis, meaning, all accounting tricks are out of the way. It's still profitable. And 3, I really like that consumer finance as an industry offers excellent potential growth and margins. All we have to do is look at other consumer finance companies, different companies that share the same sort of niche or group of niches as SoFi would be companies like American Express, Discover Financial, Capital One Financial. These are all companies that have great margins. And if you go back to when they first IPO'd, I mean, they've experienced huge growth since that point. What I do not like is that SoFi is heavily reliant on the consumer financial health. Of course, they're a consumer finance company, and so if consumer finances get really rough, people can no longer afford SoFi's products, they don't want to pay for it, or they start defaulting on loans that they have with SoFi, then of course SoFi is going to take a huge hit for that. This isn't really a knock on SoFi in general. It's something that every player in the industry has to deal with, but it is something that we need to be aware of, especially when we're sitting in such economically uncertain times. Secondly, SoFi is still trading at a very rich valuation, especially on an earnings per share basis. Like I said, 2024, they are supposed to be earnings positive, but they are trading at a valuation that is many, many times higher than that. I want to say it's approximately 50 times the 2024 estimated earnings if I just take an estimate in my head. So 50 PE of 2024 earnings, that's pretty difficult to justify unless they are able to continue with the growth that they have shown over the last several years, which might be possible. But if that growth slows down at all, SoFi is going to really struggle. And thirdly, fintech or financial technology companies are really out of favor in general. We see this with companies like PayPal, with companies like SoFi, Square, or Block, I guess, as it's now called. All of these financial technology companies have been really struggling, and I think that's partially due to the market's just general lack of trust in their performance and in their future, given interest rate sensitivity and the potential for the consumer economy to really suffer if we suffer a recession. For me, I really like finding these out of favor industries because you can find some really good deals, and SoFi might be one of those deals. So with that, I will say that I am keeping SoFi on a watch list for sure. I'm still not quite sure that I want to invest in the company yet, but their most recent earnings a few days ago were really good. It's really impressive, and I think the company will have a really great future. So I would not necessarily knock anybody for buying SoFi at its current price today of about $7 or $8 per share. What do you guys think? Do you like SoFi as a company? Are you an investor, or do you plan on investing in them in the future? Please let me know in the comments. And if you have any other ideas for stocks that you would like to be reviewed, please let me know. I would love to make a video for you. And with that, please like and subscribe to the video, and I'll see you guys next time. Thanks.